Hello everybody and welcome to the US session brief. We're on Friday the 28th of April 2023, approaching 3 p.m. here in Europe. That means we've got around 45 minutes until the New York Open. We've had the core PCE data released around about 15 minutes ago. They've come through bang on as expected, 4.6%. So markets pretty much unmoved on the back of that really. Fed's favourite inflation gauge, obviously there's more hype, let's call it, around the CPI, but it's the core PCE which actually the Fed monitor most closely. And coming through at 4.6 is a relatively good result as expected. So markets pretty much unchanged off the back of that. GDP numbers came in lower yesterday, 1.1%, so not ideal economy-wise, and that soft landing which has been talked about, it's just getting questioned again. I've been seeing that across financial Twitter. The Bank of Japan has left policies unchanged, and the yen fell on the back of that, so the BOJ remains dovish. Amazon is warned of a slowdown in AWS as the market is taking a hit. Meanwhile, we've got Exxon and Chevron reporting, or they might have already reported actually, so watch out obviously if you do hold oil. And speaking of oil, we've seen a bit of a bounce on crude prices today, recovering slightly yesterday, but still trading below 76.20. Maybe we see a retest of this area and then another knockback lower. It's often what you get when you see these breaks to the downside. We retrace, retest the horizontal level, reject back off it. Asian equities closed mostly higher today. Japanese indices surged actually following the BOJ announcement, with the yen weakening substantially. Greater China markets finished higher, with mainland markets outperforming Hong Kong. BOJ guidance was tweaked to take out reference to monitoring COVID developments. Other key components were retained. QQE and YCC yield curve control will be maintained until inflation stably reaches the 2% target. Monetary base will continue to expand. The BOJ will not hesitate to ease further if necessary. For now, the Japanese stock markets remain strong and the yen weaker. European equity markets have been relatively softer. Financial services, construction materials and healthcare leading. Banks, utilities and autos lag. We got various inflation prints today out of the Eurozone, suggesting improving picture and may lead to just a 25 basis points ECB hike next week. We've seen a bit of weakness in the euro on the back of that. London rents are topping £2,500 per month for the first time as supply of homes drop. In America, Intel gives a more optimistic outlook for margins and PC markets. Snap says disruption in ad demand to continue in Q2. US mortgage rates rise to the highest level since the middle of March. Recent Fed speak from both Hawks and Doves have played down impact around wage gains. And we've had Bank of America's Hartnett say that the US stock market rally may halt on corporate earnings drop and labour market softness. In terms of the rally, we saw a decent one yesterday intraday. We haven't been able to sustain that today, but we've basically faded the previous two daily losses. So we're back to where we were pretty much at the start of the week. We opened at 41.30 and we're now at 41.24, so we're 5 points down on the week. Despite that, we have had some, we've had some intra-week volatility there. Gold is tipping slightly lower. We've got the news of First Republic Bank potentially being rescued, so that's obviously not going to play into the hands really of gold, which was shooting higher last month on the collapse of SVB. The dollar yen, I've just been talking about the yen, that's the biggest mover on the day. As you can see, we've smashed through the technical resistance levels of 135.30 and also the upper side of the channel structure after bouncing off the bottom of that channel structure. This is an area that we talked about, so really nice moves actually, and now into the big 200-day moving average. We saw quite a turning point off this area last time we were here, so I'll be watching and potentially trading this very, very closely moving forwards. Not too much else to add from my end for today, so I'll leave it there. I'll see you all inside the chat. Otherwise, have a great weekend. Bye for now.